What's going on, everybody? Welcome back to another video here. So in this one, I have probably some of the most important information that you guys are going to hear all month. There is a very big market event coming very soon, a so-called squeeze, but we aren't necessarily sure in which direction it is going to go. We are going to go over all of the data here, the gamma potential, the short squeeze potential. Gamma can happen in both ways. There are very specific things that we need to look out for here, and especially after the comments from the Fed today, things are really about to heat up. So if you guys do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who do want to learn. And 1348 gang, make sure you guys comment down below what you guys made some money on today. I know a lot of you guys were having awesome days. Let them know down in the comments. And again, if you guys do want to see more videos like this, make sure you hit that subscribe button and hit that notification bell so you're notified every time I post a new video. So let's get right into the chart here before we start to break down all of this information. So the last 2 days on the SPY have been relatively green. We've seen a little bit of a relief bounce off of that 390 level. Now we're still crossing down on this daily time frame here. The MACD is showing a little bit less bearish momentum, and RSI is now approaching its moving average. It's very possible that the RSI is going to hit this moving average here, bounce right back off, and continue that downward pressure as well. Something else that I want to kind of point out here is, again, you have that 393 level and the 390 that are going to be really important, and again, that 400 level on the SPY as well. But if you were watching the market today and you've been listening to a lot of the things that we've been talking about, looking at this on the 5-minute time frame here, again, this nasty move down earlier today, Invictus predicted again. These gains, multi-hundreds of percent. Our algorithms at this point speak for themselves. They're absolutely filthy. Pythagoras is absolutely crushing it. Invictus, Trader Joe, our community. We have a lot of awesome things coming. So again, guys, if you do want to come to the best place to learn how to trade, make sure you check out that link down below. We have an awesome community. Never before seen algorithms for retail. It is absolutely amazing what our team has been able to accomplish. But let's kind of get further into this information here, and we have to go back a little bit further. Remember, the Fed is looking at a wide variety of data right now to really determine what they're going to do with their policy. A lot of that is going to be in the jobs market. So what did we recently see? Well, we saw non-farm payrolls a little bit lower than expected. We saw the unemployment rate a little bit higher than expected, and the average hourly earnings increased a little bit lower than expected too. So you can see this as a little bit of softening in the job market. Now, when we're looking at this data over here from the CPI, well, the CPI is going to be getting released next Tuesday. Now, this is incredibly important for all of the things that we need to know going forward. So, CPI, remember, we've talked about this a lot. Energy makes up a very significant amount of the consumer price index. Now, when we think about energy, and what energy has actually done over the last couple of months, well, this leads us into a situation where we could have a pretty significant CPI beat. So CPI would come in well below expectations. Here is why. When we pull up retail gas right here, what has actually happened since the end of June? Well, we've seen that gas prices have significantly decreased from this 5 range all the way down to about 385. So a decrease there in energy that has been a major driving factor in the increases of all these inflationary pressures. Then when we come over to actual oil, well, we've seen a very similar thing. We look at the end of June coming into the end of August as well, going into September, and we've seen a drastic decrease in oil prices. Okay, what about food? Well, when we pull up the chart of food here, we go into June, July, and also August, we're seeing decreases. So all of these major components of CPI are starting to come down. Now, what is the estimate right now for CPI? Well, when we come over here, the only estimate that we really have right now is the trading economics estimate, and that's going to be about 8.1%. Now, here's what we need to look at here. The market as a whole, we're going to kind of expand on this a little bit more. The market as a whole is kind of sitting right here around that 400 level. Now, we're going to go over all of what's going on in the derivatives market that can squeeze the market in both directions, but I want to talk about Fed policy for a second. So if you start to see a little bit of weakness in the job market, higher unemployment, you also recently saw the Atlanta Fed start to slash their Q2 GDP, or not Q2, Q3 GDP estimates. So what that tells us is that they're kind of signaling for less growth. Then you see inflation start to come under control a little bit. Well, what does that give the Fed the ability to do? It enables them to kind of back off some of their hawkish statements and go on the more dovish side. Are they most likely going to do a 75 basis point hike in September? Yes, they most likely are, but that's not what the market is curious about. It's really looking for what Powell's statements are going to be, because because the risk with rates is not that they continue to raise rates too much, it's that they back off too early and let inflation pick right back up. Now, again, kind of going on the overall market side, I want to go through a couple of these things with you guys here. So, in terms of short interest in the overall market, so again, that is a bullish thing that could happen with the overall market right now. Coming back to this chart right here, I do want to look a little bit at short interest of some of these big market ETFs. But in general, if the market is going to react positively to CPI, these jobs numbers, and whatever Powell has to say, you could see a little bit of relief in the overall market. Now, remember back in early August, or when we were going on that significant run, right after the last CPI data and jobs numbers came out, we were seeing an aggressive amount of shorting in the overall market. Now, what is that short interest looking like right now? Well, we're seeing about 19.53% on the SPY. On IWM, the Russell 2000 ETF, we're seeing about 36.67% shorted. And on QQQ, we're seeing about 14.47% shorted. Now, here's the other thing. You also have this very interesting situation here where institutions are buying a record amount in hedges. Institutional trader net speculative options premiums in billions. Last week's panic hedging was 3 times more extreme than in 2008. And that brings us to a very interesting situation and why I'm saying the market is essentially on basically a seesaw or a pyramid right here where it could go either way. Now, when you see all of these puts getting bought, remember, gamma squeezes can happen in both directions. So a lot of puts are being bought, and the dealers or the option sellers are going to need to hedge them. Now, when they hedge them, they have to go out in the open market and short. That's how this works. That's how they become delta neutral. So they're basically market neutral, and they're just selling these premiums out there and are hedging their risk. Now, what happens then, though, is that since so many options are getting purchased, you create these big walls of options premiums or open interest at these specific strikes that if you slip down below, more hedging happens. But the most important part is the deep out of the money options with those really, really low deltas. If the market continues to come down, those options and those strikes that have really, really low deltas on them are going to significantly increase, causing more hedging or shorting to happen in the market, further forcing the market down, and it creates that snowballing effect. But here's why I said in the beginning of the video that can happen in both ways, and kind of the way that a lot of you guys might be interpreting this when you're watching this video here. When everybody thinks squeeze or gamma squeeze, they think up. Well, here's what could happen to the upside here. If we start to see the CPI data get basically perceived by the market as being positive, then we go into Powell, and we see that 75 basis point hike or whatever the market is expecting right now, which at the current time is a 75 basis point hike. Well, if these institutions who are hedging right now feel the need to unhedge their positions and they no longer need 3 times more hedging than in 2008, well, they start to sell those puts back to the dealers. Okay. Thinking about that logically, the dealers or whoever is selling these options right now, market makers, a large banking institution, whoever it may be, once they buy back those options, well, then they are also sitting on a boatload of short positions that they no longer need. So then you can start to see the market come back up in an aggressive rally to the upside. So a lot of what's going to happen here over the next couple of days and weeks is going to hinge on how CPI data comes out. Remember, gas prices down, oil prices down, food prices slightly decreasing as well, which could lead to a pretty significant beat in CPI. We're still waiting to see what happens next Tuesday. But again, those are kind of the key factors that we're looking at here and is going to set the tone going into Powell. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening. I'll see you in the next one. Peace.